All right, look, most people are getting wrecked in crypto. Most people are getting wrecked in crypto, whether they are day traders, whether they are swing traders, or even investors, because they are doing it wrong. And the reason is either they're not using candlesticks in their TA, or they're not using candlesticks at all, or they don't place enough weight on candlesticks. So what I'm gonna do in this video is show you how to use candlesticks properly, catered to crypto, because it's very different using candlesticks generally and very different when you use candlesticks in cryptocurrency. And I'm telling you right now, most people out there talking about candlesticks, they're completely wrong. They don't know what they're talking about. Even if you Google candlesticks, you're gonna see charts or you're gonna see graphics telling you what candlesticks are and how to use them, and they're completely wrong. Now look, at this point, you're either gonna keep on watching the video or you're not. Listen, I've been in crypto since 2017, not just as an investor, not just as a trader, but a C-level executive. I've written multiple books. I've done multiple keynotes at some of the biggest exhibitions and summits in the world. I live from crypto. And before crypto, I used to teach technical analysis in the Forex industry. Now, normally, this is all part of my paid course. You're paying upwards from $1,200 just to get that course, but you're gonna get this completely free today, no strings attached, because I'm tired of all of you out there losing money. Whether you're in a bull market, bear market, you need to be able to know how to use TA, and the missing link, and I'm stressing this, are candlesticks for crypto. So without further ado, let's jump right in and let's get straight to the introduction of how to use candlesticks for crypto. All right, so candlesticks give us a huge advantage, and even though a lot of people talk about them, not many people use them, especially in crypto, and the ones that do, use them incorrectly. I'm not joking, I'm not over-exaggerating. I learned how to candlestick trade straight from the source because my mentor got me some extremely expensive courses on candlestick training from Steve Nison, which was the creator, the founder of candlesticks. He discovered them and brought them to the West. And a lot of things I see, it just drives me nuts because they're getting it wrong, but also they're so underutilized. And this gives us a huge advantage when we use candlesticks, because you want to use what other people do not use so you can gain that advantage. So we included candlesticks in this course and also on the indicator, the factor line. I'll show you that later, but let's get through some basics of candlesticks. All right, so we're gonna talk about candlestick patterns. Now, you have to understand when using candlesticks, you want to combine them. There's the actual triangle. The triangle here represents what you need. You need Eastern technical analysis, which is candlesticks, Western, which is patterns, what we mostly use and what other people mostly use, and there's management, and this is key. You need the trifecta. You need Eastern technicals, candlesticks. This is extremely good for reversal patterns and so on. We'll talk about that in just one second. Western technical analysis, your heads and shoulders, your inverse heads and shoulders, your cup and handle, which I use a lot, and so on. And management is key. Probably one of the most important parts is how to take the trade, where to put your stop loss, and I'm going to show you how to do that on candlesticks in this section of the course. So fun fact for you here, the best traders in the world have more losing trades but higher P&L. Do you understand what that means? Like, the best traders usually have a lot more losing trades. They might have 24, 25, 26 losing trades compared to 20 wins, but their profits are a lot more. Their P&L is a lot higher. Why? Because of portfolio management, because of management. This is key. I'm gonna be showing you that in this course as well. So you can actually take 10 trades and get 7 wrong, and that 2 and 3 trades, 2 or 3 trades you take can actually make you a fortune. 1 or 2 trades can actually make you money, and you can live off trading. So it's extremely important. Not many people talk about that. Just like the best traders in the world also take fewer trades during the year. They might take 2, 3, 4, maybe 6 trades during the year. Now, of course, in crypto, maybe it's a lot more, but generally speaking, yes, less trades is better, more profits, and also you can sleep at night. There's a saying that I have. It's when I sleep. When I used to day trade, we sleep like babies. Day traders, we sleep like babies. We wake up every 2 hours and cry. Anyway, let me keep going here. Now, every single candle you look at, every single candle gives you a story, tells you a story. For example, a long lower wick could be bulls getting bullish and bears getting exhausted. This is key. And the longer the wick, there's more momentum and so on. So by each candle, it just gives you a story, it gives you the market psychology, what other metrics don't really give you. It gives you an actual story. And that's extremely important, gives you a full advantage when using candlesticks when you're trading. And again, not many people use it in crypto, or they're using it wrong, giving you a massive advantage. And one of the reasons I get the tops and bottom calls like I do is through candlesticks, but no one really knows how to use them. Imagine the course that I got, the course I was given a series of courses. One of them alone, there was 3 of them, one of them alone cost $8,000 way back then. This was before 2015. This was something like 2013, 14, somewhere around there. And also understand that it differentiates, it's different when it comes to crypto. There's a few things you need to change, and most people don't know that. But you have to understand that I also had the courses of Forex. And one of the reasons that Forex is different to normal candlestick trading is because really it's a 24-hour market. Well, what is crypto? A 24-hour market. So we have the advantage here, and this is something you're gonna get in the course. You'll see exactly what I mean. Now, when you look at candlesticks, you have to understand that there are single formations, double formations, triple, and then there are continuation candles. And what that means is you can look at a standalone candle and it will give you a story, but then you have 2 candles combined that gives you another story, 3 candles, and then continuation patterns. So it's not just looking at one candle. You certainly can. I'm going to show you how to do it in the next lesson, as a matter of fact. But there's also the 2 candles and 3 candles, and that's when you get those dark cloud covers that no one's really talking about and so on. So really exciting stuff. Now, if you look on the internet, you're gonna see charts like this explaining to you what some of these candles are and what they're called. And I used this chart from the internet on purpose and deleted its branding because it's not, my point of this video is not calling anybody out. If this was YouTube, I would call them out, right? But this is a course, this is more about teaching you some stuff, and it's wrong. Like what they literally wrote for each candle, they are wrong, both in strength-wise, but also formation-wise. So these are some single candles, and let me show you where they're wrong over here. So you have the Marabuzu and you have the hammer. This here is not a hammer candle. It's just not. And by the way, it could be green, it could also be black, it's the same thing. But the reason this is not a hammer is because its body or its wick, it's not at least twice the amount or higher than the body. So this is not a hammer over here, it's just not. This hanging man they have here, which is indeed a hanging man, is a hammer. It just depends where it's in the chart. But again, this here is not a hammer. It's not considered a hammer. This here is indeed an inverted hammer, but it's not bullish. It's not as bullish as they're giving you here on the chart. As a matter of fact, hammers always come at the bottom of charts. It has to have a bottom trend and it's a bottom formation. And it has to be in a downtrend, right? And the inverted hammer is not as bullish as the hammer. So this is actually wrong here. It should be more towards the end, if that makes sense, rather than third one from the left. I mean, a dragonfly doji or even a doji is more powerful, more bullish than an inverted hammer when it's in a downtrend, believe it or not. So this is extremely wrong. Of course, this shooting star, also wrong. The wick has to be longer here, and so on. And it doesn't tell you where these are supposed to be in order for them to be confirmed. For example, a shooting star has to be on the top of a range, just like an just like a hammer has to be at the bottom of a range. A shooting star has to be on the top of a range for it to be a shooting star. And this is not a shooting star. This is more of a shooting star, even though it's a stone doji, if the body was a little bit bigger. Does that make sense? So the information you're getting on the internet, most of it out there is complete crap. They even got the fundamentals wrong, let alone how to use them. Right? So this is why I use candlesticks. I don't usually talk about it in videos because I like having the advantage. There's a lot of things I don't talk about in videos because I like having the advantage. And a lot of times you see comments in videos saying, Paul, if you know all this stuff, why are you talking about it? Why are you giving this information out for free? I'm not giving this information out for free. I'm actually using this myself. You're getting this information now by getting this course. And yes, maybe I talk about this sporadically in videos, but really no one really pays attention. They will listen and then they will forget about it and go on to simpler stuff because generally speaking, people are lazy and people are looking for shortcuts. And as soon as they hear somebody say, oh, you don't really need this, they don't use it. So they don't use candlesticks, and that gives us our advantage. So what are some of the benefits for using candlesticks? Well, first of all, you can actually get early reversals. Just like I told you about the hammer earlier on being at the bottom of trends. I'm going to show you that later on, but you can actually get in early. It also gives you different benefits. For example, where to set stop losses. A lot of times people ask, Paul, where should I set my stop loss? And what's the amount or whatever? Use the wicks. You use the wicks on certain candles. I'm going to show you exactly how to do that. The candles are also good for quickly looking at the psychology of the market. See, the bar chart doesn't really show you the psychology. The candle gives you the actual psychology of what's going on in that specific time frame, which is very, very big. It's huge. And also candles allow you to get out faster. And I'm going to show you examples on our chart where Western technical analysis tells you to get out, where our chart tells you to take out, where Eastern technical analysis tells you to get out, and where combining all of them tells you to get out. And that's how we get those tops and bottoms that a lot of people claim that I'm known for. So just to quickly go over this is a line chart over here. A lot of people just use this. This is a bar chart where you have the open and the close. So right here, let's say it opened over here, it closed over here. And you see it's green, and so on, but that's about it. But candles give you the story. For example, right here, this is a doji. This is indecisiveness. The markets are undecisive over here, for example. Or over here, this is a hammer, by the way, because it isn't a downtrend, even if it's a short-term downtrend. This is a hammer over here. This is a reversal, even though it's a bit argumentative because this could be considered an uptrend, so you have to be a little bit careful with this. We'll look at these individual stuff later on. But right here, for example, this right here gives you the shooting star, which is basically tells you to get out, and you would get out under right here, right before this candle went completely bearish on down, and now it's giving you a signal to get back in. Even though this is showing you bearish right now, this is actually giving you a signal to get back in. So candlesticks give you a bigger picture and a story rather than just looking at a bar chart. And you have to understand that, again, it's more about psychology and it's more about confirmation. It's not to be used standalone. We'll talk about that a little bit more in just a second. So let's talk about what candles do not do, and this is a couple of things I hear here and there. First of all, they are not a trading system. A lot of people say, oh, I trade with candles, I use candles as a trading system. Well, candles are not a trading system. They're a way to gauge psychology and look at psychology of the markets, and they're an add-on to what you're doing. You still need your patterns, you still need your trends, you still need this, you still need that. candles just gives you the extra edge and gives you more information so you can take better and faster trades, so to speak, and be able to see reversal patterns. That's the magic of candles, but they are not a trading system. You wouldn't use candles on their own. They just don't work on their own. You need some sort of confirmation, if that makes sense. Even if it's just a trend line or momentum line or something like that, you just need that in order to see the big picture. Also, candles do not give price targets. So if somebody gives you a price target of this certain candle, that's our price target or something like that, candles just don't do that. You have to be a moron to say that, as a matter of fact. That's not what they're for, that's not what they're used for, and that's not what they do. So let's look at some important candlesticks. We're gonna start with single candlesticks in the next lesson. I'm gonna explain to you what they are, how to recognize them, how the factor line can actually find them for you, and also where you need to look for them, because you can have two hammers in two different places and one place is just not a hammer, even though it looks exactly the same as the other hammer. So there's a few things you need to know. I'm super excited about this, by the way, because I just love candles, and you can tell. And yeah, let's just get right to it. All right, there you go. Now you know how and why you need to use candlesticks when you trade crypto. Now we're gonna go over single candlestick formations. These are extremely powerful and they're often signs of reversal. So make sure you watch this video here next. This goes through everything you need to know for single candlestick formations. Now, if you don't see a video there yet, that's probably because you haven't opted in yet. Don't worry, it's completely free. Just sign up below with your best email address or use this link up here, and you will have access to all the videos plus a bunch of bonuses. So go ahead and opt in, and I will see you in the next video.